So in this RENKO trading strategy video, I will be showing you how to use RENKO charts in order to identify high probability support and resistance levels. So let's get started.
Click on the subscribe button and bell icon to get instantly notified when a new video is uploaded. Thank you for subscribing.
So support and resistance is one concept that is known to almost every trader who is in the market. And let me first show you the basic support and resistance structure that is visible on a candlestick chart, and then I will show you how you can see this on a RENKO chart. Now, a region of support on the chart is that particular zone where price usually finds it difficult to move lower and then it starts moving higher. So in these two regions that you see, these are the two zones where price repeatedly probed this area and then moved higher. Similarly, if you look at this particular region here, price has probed this region 3 times and then it started moving higher. So irrespective of which chart you use in terms of bar chart, candlestick chart, or even Ikeneshi or any other charting method, support and resistance zones are very easy to identify, and this is something every trader needs to look into because these provide excellent entry and exit opportunities. Now, similar to support regions, there are also these resistance regions where price finds it difficult to move higher, and once price encounters such a region, it then starts moving lower. Now, if you take a look at this particular zone here, price has probed this region about 3 to 4 times and then it moved lower. If you also take a look at this particular region, again here price has probed this region 3 times and after that it started moving lower. So the basic concept of support and resistance is something that every trader should understand, and what I'm going to show you in this video is why RENKO charts are a far superior support and resistance indicator and why you should be using this on a daily basis to identify potential support and resistance level in the instrument you are trying to trade in. Now, when it comes to identifying support and resistance, there is one problem that is not addressed that often, and let me show you that problem. So if you look at this particular chart, I have marked out 4 potential resistance zones here. If you look at all these zones, these are very similar to what I've marked here. Now, the reason why I say so that this particular problem of benefit of hindsight has to be addressed in support and resistance, because it is very easy for someone to show you in a book or a video a resistance or support level that has worked in the past, but in real time you will encounter such situations where a potential resistance region will be breached repeatedly on the upside, and if you're taking a trade in these regions, you will face a lot of false signals. So again, this is one topic that is not covered that often because this is something that you encounter in real-time trading, and this has to be addressed in case you want to become a good trader in terms of identifying support and resistance levels. Now, in this particular video, I will show you why RENKO chart is a much superior support and resistance indicator, if you may call it, and why you should be using it. And I'll also show you some potential problems in RENKO chart. And towards the last section of the video, I will be also suggesting solutions for the same. So if you look at this particular chart, I'll show you the RENKO chart of the same. So this is the same data that you see in this particular chart. And in this particular chart, if you see, these resistance zones are clearly identifiable. But the same chart, when you look through RENKO chart point of view, look, there is no consolidation region here. That is, neither there is a double top, triple top resistance level that is visible. Same on these 2 points here. Now, the reason why this happens is because RENKO only plots relevant information on the chart, and therefore all this data that you see here in a standard candlestick chart or bar chart, these are completely ignored when it comes to RENKO charts. And this again re-emphasizes the point that I was trying to make in part 1, that RENKO charts is more powerful when you try and combine it with some other standard candlestick charts or bar charts or even line chart. Now, the information that you can see on a candlestick chart, that is represented in a much concise manner when it comes to RENKO chart. Therefore, the resistance levels that you're seeing on a standard candlestick chart, these are not visible on the RENKO chart. Now, if you're someone who uses RENKO chart regularly, this particular chart actually represents a strong uptrend in place. Whereas if you look at a standard candlestick chart, this again and again gives you a impression of resistance developing at higher level, which will hinder in your decision making process because that is how real-time trading works. So let me now explain the various types of support and resistance that you can see through RENKO charts, and I'll also explain some potential problems here, And then towards the end of the video, I will show you how you need to use RENKO chart to identify support and resistance level. So the first type of support and resistance that you can see through RENKO chart is in form of a simple trend line. Now once you have 3 points in place where price has repeatedly revisited the trend line, then you can extend that line further, and this would potentially act as a support level heading ahead. Now again, I will show you a potential problem with this because this chart has already played out, and in hindsight it is very easy to connect these 3 points and then extend the line further, which is where you can see that price clearly takes support at this particular trend line level. So again, when it comes to real-time trading, this is not how trading works. If you look at this particular chart, again in this chart I can connect these 3 dots here, but look what happens. At this particular point, the trend line clearly breaks and price starts moving sideways. So this chart could have easily turned out to be this chart here, but the thing is, because this has already played out, it is easy for me to connect the lines here. Whereas when it comes to real-time trading, you will encounter this situation more often than not. And this is something that has to be addressed because this will lead to a lot of false signals, and eventually you will start losing faith on RENKO charts, because as your losses start to pile up, that is when you will start to doubt this method. So the trendline method is the first method through which you can identify support and resistance level. And the next method is something like a double top, and I'll also be coming to a triple top method. So in this double top method, price usually finds it difficult to cross this particular region where clearly 2 tops are marked, and then price starts to move lower. Again, if you see this particular region, this is again very similar to what I have marked here. This is again a potential double top resistance region where price cannot move past this particular zone, and then it trends lower. Now, while in this particular chart, this double top resistance here and similarly this double top resistance here seems very easy and something that you can include in your own trading, but again you have a lot of benefit of hindsight here. So I've just handpicked this example here to show you how this double top resistance level works. So let me just pull up a couple of charts in which you will understand the point I'm trying to make. So this particular chart, you've had a nice uptrend in place, and then price encounters 2 double tops here. That is, this can be classified as a double top resistance level. So if you look at this particular breakdown point, this is very similar to the breakdown point that we are seeing here. I hope at this particular point all of you agree. After price has a breakdown here, you just get 3 to 4 RENKO bricks on the downside, and then price again starts moving higher. So if I were to show you the benefit of double top resistance or triple top resistance, I would just pull up this chart and show you how this works, because it is much easier for me to show you after this chart has printed. Now, when it comes to real-time trading, more often than not, you will identify such situations more where a clear double top would be in place. You would see a breakdown happening, but in the end, this would turn out to be a false signal. So the point that I'm trying to make is that you just cannot identify support and resistance based on the traditional method where you take a double top, triple top, or a double bottom, triple bottom, or something like even trend line as support and resistance level, because that only works in hindsight. And very rarely you will find this working in real time. It is not that it does not work, and I don't want to discredit anyone who does this. But the point that I'm trying to make is that out of 10 times, 4 times you will see this working, whereas 6 times this will fail. And those 6 times when it starts failing, that is when you start doubting a method. So therefore, the thing that I'm trying to advocate is that there has to be a better way to mark out support and resistance through RENKO chart or any other given charting method. Because as traders, all you're looking out for is high probability support and resistance zones that will work in real time. Now, another type of support and resistance that is quite popular in RENKO chart is the triple bottom and the triple top method. Now, in the triple top method, price is unable to cross a particular zone here like I've marked in this chart, and then price starts to move lower. Now, triple bottom and support and double bottom and support work really well with RENKO charts, but the thing is you require some set of rules that I will explain that will give you a framework to identify high probability support and resistance level. Now, in this chart, this is the region where price has found it difficult to move higher, and since then price moves lower. You again get couple of consolidation regions here which are just counter trend movements, but overall trajectory of price remains on the downside. Now this particular pattern, that is triple top resistance is much more stronger than double top resistance, and this actually does work out very well. But again, we come down to the same problem of benefit of hindsight. If you look at this chart, this structure is again very similar to what I've shown here. But in this particular chart, you do see price moving lower after the triple top resistance is in place. But when you look at this particular chart, again, a beautiful structure of triple top resistance is in place. Price does move lower initially, but after a couple of sessions, it again starts moving higher. Now, how do we identify which triple top resistance, or let's say which double top resistance is going to play out, and which double top and triple top resistance, or let's say even a trend line support and resistance is going to fail? Now, this is what will help you move forward, because unless and until you have well-defined set of rules to identify support and resistance level, this becomes too random when it comes to real-time trading. So I hope till this point you have understood that RENKO chart definitely gives you advantage of more concise information, and it is much clearer to identify support and resistance zone here. But let me now come to the solution aspect as to how you have to identify high probability support and resistance zones and what are the conditions that you need to check. Now, do take note here of whatever I'm telling. By the way, towards the end of this particular video, I have summarized most of the rules here. But what I'll do is with each chart, I will first explain the rules that you have to follow, and then we will come towards the summary section. So the solution that I suggest in terms of identifying high probability support and resistance with RENKO chart is based on box size, strength of support and resistance, and the overall range. So what I propose here is that the range of support and resistance that you identify should at least be 1 month, and the range should be plotted over a box size that is of 0.5% or higher. I hope this is clear. So let's say the current market price is 25,000. The box size has to be above 125 points, that is above 0.5%. Now, what this gives you is a much more concise information, and it also tells you the right amount of time consolidation that has happened in formation of a particular range in price. Now, range is where you can easily identify support and resistance level, and once price moves out of this range, that is at least a range which is 1 month or greater, and with a box size of 0.5% or higher, you will see on real-time basis that such support and resistance zones work really well with RENKO chart. So essentially, we are taking the same concept of a double top resistance or support or a triple top resistance or support. It is just that we are now defining that within a particular range and a box size. Now, this is the solution that I've found that works really well on real-time trading, and this is what you should be focusing upon. Now, in this chart, if you see, the range of support region here is over 40 days with a box size of 0.5% or higher. And once the breakout happens in the month of November, somewhere in this region, then the trajectory of trend remains on the upside. Now, don't look at counter trend retracements here, because in the first part I showed you, when we get down to the application of RENKO chart, I will show you how you have to filter these counter trend movements, but you just have to focus upon the trajectory of trend. And if you have some bit of experience in the market till now, you need to understand only one thing, that in order to be a successful trader or a profitable trader, all you need to know is the broad term direction of trend. Once you come to know that, then you can use various strategies in order to capitalize on that. So now what I've shown you here with respect to the range and the box size, this is not something random, because this happens every now and then, and I've taken up Bank Nifty here as an example. So this is a region between October and December 2019, and this is where the support zone was actually playing out. Look at what happened a couple of months ahead. So between January and February, you again saw one more support region developing. So this range again lasted for a period of 2.5 months with box size of 0.5% or higher. So you first saw a support zone developing between October and November, and that is when the breakout actually happened. Price then progressed higher, and it again formed one support region. Now, why these both support regions qualify? Because we have clearly laid out the rule here that range has to be 1 month or higher with a box size of 0.5% of current market price. So again, Bank Nifty between January and March formed a range over 2.5 months, and then the breakout actually happened. Now, if you change the box size in this time period to about 0.3%, or even if you change the time frame, because I use this on a TradingView platform, so this does plot Renko over time frame. If you go down to something like a 15-minute, 5-minute or a 10-minute time frame, there will be a lot of false signals that will be present in this region in terms of double top resistance or support and triple top resistance and support. So which is why when I was researching about Renko chart and its application in terms of support and resistance, I wanted a concrete framework that actually works in real time. And I took the concept of double top resistance support, even triple top resistance support, and I defined it within a set of rules which actually gives you high probability support and resistance level. So what I'm looking for in a chart is a clear range formation that happens where range is clearly over 1 month, and then I wait for a move either on the upside or on the downside. That is when I found that Renko chart in terms of support and resistance works really well. Now, similar to the support zone, resistance zone is something again I would classify with the same rules. So again, here instrument is Bank Nifty, and resistance zone is forming over a period of 2 months with 0.5% or higher box size. And again, this works really well when it comes to identifying the right resistance region in the market. And it is not that this only works in our market or our stocks. If you take something like S&P 500, that is 60-minute time frame, again towards the year 2020, this was the region where a lot of noise was there about S&P 500 now moving lower. But look at what happened again in this particular region. Range was over a period of 2.5 months with a box size of 0.5% or higher. Clear resistance and clear support was well defined in this region. And once price broke out, then S&P 500 clearly started trending higher. Now, the reason I have picked out examples of the last 3 to 4 months, because I just want to show you that this does really work. And it is not that this is just an advantage of hindsight analysis. So if you take a look at something like Tata Steel, this was a previous year between the month of May and July. Again, range forming over 2 months, 0.5% or higher box size. You saw a clear breakdown happening and price moving lower. Now, this was not a one-off instance, because a couple of months later, in August and in October, again Tata Steel formed a range over 2 months with box size of 0.5% or higher. And again, you see a breakout happening. And both these signals over the last 6 months, that is between July 2019 and September 2019, worked really well. The first signal worked well on the downside, and the second signal worked really well on the upside, because this is a phase where Tata Steel really started moving up with momentum. And both these moves on the upside and on the downside was clearly visible through Renko chart. So when it comes to identifying a weak support and resistance region and a strong support and resistance region, we do so by clearly applying our rules. So if you look at this region, this double top resistance region is developing over a period of 20 days. So I would mark this as a weak support and resistance region. And despite of the fact that we get a breakdown here, I would be very circumspect in trading this. Now, had this double top resistance developed over a period of 1 month or more, then the breakdown that would have happened, I would have categorized that as a strong breakdown. So if you take a look at this strong support and resistance chart, the reason why I've marked it strong is because the range is over a period of 2.5 months with a box size of 0.5% or higher. So this clearly represents a lot of consolidation happening in the market, both in terms of price and time. And this is what I want to see in my charts, because this represents good amount of fight between buyers and sellers, and then eventually one end prevails. When you look at a smaller consolidation region, this is where price has not consolidated that much, both in terms of price and time, and you cannot determine with certainty which side prevails, because the range is not over a significant period of time, and hence it does not represent a lot of activity in the market. So that is how I categorize a weak support and resistance level and a strong support and resistance level. And whatever books or videos that I saw on Renko chart, I did read a lot of blogs as well. Now, most of the blogs and videos, they miss this crucial point of how to differentiate between a strong support and resistance level and how do you avoid a weak support and resistance level on real-time basis. Now, the reason I am introducing you to the concept of support and resistance through Renko so early is because when I start the live trading videos on RENKO and when I also start the various strategies video, this is a concept that I'm going to use a lot, because a lot of the strategies that I will teach you based on RENKO chart will rely on identifying high probability support and resistance level. So let me just tell you the key rules that you have to apply. You can take a screenshot of this particular slide because this will come in handy. The first rule that I would tell you is that avoid calling every double top, triple top bottom as support or resistance. That is not how you should be using RENKO chart. When it comes to brick size, keep in mind that it should be greater than 0.5% because that is what will represent right amount of activity in the market that you need to focus upon. Now, ideal range to identify support and resistance, that is in terms of brick size, it is between 0.5% and 1%. So if you start with 0.5% and you don't get that much clarity, you can enter value between 0.5 and 1% to see if you get further clarity in terms of identifying strong support and resistance level. Now, in case your RENKO software also uses the time scale, then make sure the support and resistance level is clearly visible over the last 1.5 to 2 months. Now, this is absolutely crucial because you are looking for both price and time consolidation. Now, when it comes to a trading channel or a trend line, what I felt is that a range-based support and resistance that I just showed you in all these charts, these actually work much better than trend line or a particular price channel. Now, I will be covering trend lines in a separate video because I'll give you some very specific rules as to how you need to trade RENKO charts and trend line, but that is for a separate part. Now, in case you have missed out the first part of RENKO charts, then do check out this particular video because this is where I have covered the basics of RENKO chart in detail, and this is something you should be knowing before you proceed further. So kindly consider hitting the like button and sharing this video if you find the content useful. Thanks a lot for watching this video, guys. Take care and be safe.